Welcome to our 2021 webinar series. LLIS believes that in 2021, knowledge is key. So each month you'll learn key insurance solutions to better your insurance knowledge. Our insurance specialists keep up with the constant changes in the insurance industry, especially during a pandemic. Our specialists will review some basics, use some case studies to show how LLIS crafted risk management strategies, and answer your insurance related questions. Each webinar will last about 50 minutes, and you must be logged on for the full 50 minutes to receive CFP credit. Please be sure to ask questions as you have them by typing them into the questions box. Today's webinar is being recorded and will be posted on our website within a week in case you missed it. Today's presenter was recruited from one of the top disability insurance providers to be our second disability insurance specialist. Since 2015, he's helped many advisors and their clients not just with disability insurance, but also life insurance. Here to present on disability insurance is Brian Ciccarelli.
Claudia, thank you very much for the introduction and welcome all. Happy to be here today. When I started my insurance career, I learned a lot about life insurance and I immediately gravitated towards disability. Disability is one of those fields where it's interesting every single day. New clients with new challenges, different occupations, different underwriting guidelines, different underwriting perspectives along the way. Everything is always evolving, and I'm happy to share some of the nuances about disability insurance today as well. If you do have questions, please type them in. I will answer them all at the end of the presentation. Let's get started. So today we're going to go over the different types of disabilities. We're going to talk and go a little bit more detail about how do we fund a disability. There are many differences between group and individual disability options. We're also going to talk about policy design, what makes up a disability policy. We're going to go into underwriting, and also we're going to talk quite a few case studies as well. So what are some of the common causes of disability? So one, if you ask somebody, do you have disability insurance, and they may say, oh, I'm good. I have workman's comp at my job, and that's great if you get injured at the job. Freak accident. I mean, when I was younger, I was healthy and I didn't really see myself as being someone in a wheelchair or being disabled, but I could relate to accidents. I ever thought if I ever did become disabled, watching the news, we see accidents all the time. On social media, you see accidents and different things. So that would probably be the one area I thought that I may become disabled if I ever do. But not only is there injuries at work and freak accidents, most of the claims that we see coming in are not injuries at work or freak accidents. Are really cancer, heart attack, diabetes, back pain, arthritis, mental nervous claims. These are some of the things that we see most often, and some of the things that are really a focus when it comes to underwriting as well. So let's talk about a few different types of disabilities. We've highlighted a few here. Here's a consultant at the age of 29 took out a policy. 3 years later, was diagnosed with renal disease. He ended up collecting a claim for 57 months, almost 5 years of benefits, and total benefits that he received was $292,000. Another one I have here is a physician diagnosed with ALS, uh, received six claims, 6 months of being on claim, 73,000. As you see, they're both different types of claims here, but look at the ages. So the consultant was age 29 when they took out the policy. 3 years later had a claim, and the physician at age 55 took out a policy and had a claim 3 years later. And as we look across the different types of occupations here, it's really everybody from accountants to veterinarians and everywhere in between, contractors. We look at the issue ages. I mean, someone from in their 20s, I see someone at 27 applied for a policy, all the way up to, in their 50s, they're still applying for policies. And talk about the age of disability. Really, it could happen at any time. So, when I look at this, and one of the number one objections that I hear is that I have a desk job. If I become disabled, I'm still able to do my job. And you know what? That might be true. I mean, some people can still do their job while disabled. But, when I look at a couple of leukemia, if you had leukemia, would you still really probably be able to do your job? Maybe sometimes, but not always. A severe vision impairment. I mean, I hit my 40s, and I got to tell you, I mean, I'm worthless without my readers. I need my readers to do my job, and while it's not severe, I can see when I don't have my readers, it's hard for me to see the screen. Imagine if I had a severe vision impairment. That really may make it difficult to do your job. Some of these other things like throat cancer and a pelvic fracture, um, that might make it difficult to do your job as well. So all these are legitimate different types of disabilities. When anybody asks you, they tell you that they can do their job while disabled. There's many things that they probably are not thinking about that can truly disable somebody. So planning ahead, some things you need to think about. So similar to long-term care, someone who needs care has a lot of extra medical bills. You'll often see new medications coming in. It might be nursing care, hospital bills. They all add up. So you go with a disability, you lose your income at work. It might be partial income. You may be able to work, a few hours a week or part time. You may be out of work full time. So how do you replace that income? And insurance premiums and benefits still need to be paid. Not from a disability, but my wife and I saw this when COVID first started. A lot of plants, she works with government contracts, and while they were still doing a lot of business and a lot of work, a lot of their partners or manufacturers that they work with, they were shutting down plants. Um, Parts weren't became unavailable, and so I kind of related that to maybe a partial disability because my wife, she has the health insurance through her job. She's also, paying the health spending account, disability insurance, and life insurance premiums all come out of her biweekly paychecks. So what happened is her company did a furlough, and that means she was off for 2 weeks and then worked for 2 weeks and then off for 2 weeks. So when her paychecks were coming in, she received zero for the 2 weeks that she didn't work, and then she received her paycheck for the 2 weeks she did work, but extra items came out of it. So her paycheck was even reduced further because the health spending account and all the insurances came out of the one check. So that's similar to a partial disability. Insurance premiums and all those other benefits are still added costs that you need to be considered. So how are these bills going to get paid? So our fielding advisor we work with, I know you guys do a really great job of creating emergency funds, rainy day funds for your clients. It might be, 90 days, 6 months, a year. That's an easy way to access your funds through the emergency fund. What about claims? You know, one thing you want to do is if you think you're going to have a claim, you probably want to start reaching out to the insurance company, whether it's a group or individual plan. Oftentimes, a mistake that people make is they wait until their elimination period is up. It's a good idea once you think you're going to have a claim to start getting the paperwork submitted, get those things underway so that once you hit your elimination period and you're able to start accruing a claim to get that process moving. File for Social Security. Some group policies may require you to file for Social Security, but if you're fully disabled, it's probably a good idea to go ahead and start that process as well. How about borrow from relatives or friends? Nobody really ever wants to borrow from friends or family, but that is an option for a lot of people, or some people may need to resort to that. How about a GoFundMe page? Um, personal story. I know a guy from my church, and seems like a very healthy guy. He ended up with two brain aneurysms and had to go into immediate surgery. Had 10% chance of surviving. He ended up surviving. He's doing well today, which is great. But he was out of work for some time, and we had a GoFundMe page come out, and we helped support him. And everybody's glad to help this family, but as a recipient, that's something your clients may not want to have done is a GoFundMe page. So there's better solutions out there. How about spouse works extra hours? Unfortunately, a lot of times when one spouse is out on a disability, the other spouse has to take up extra hours at work and have to make up those financial resources. Um, but also, too, that spouse also is responsible for a lot more work helping the spouse that is disabled. So, a good way to mitigate all your risk is really just to have a group or individual disability plan in place. How about Social Security disability benefits? On average, in 2021, the average Social Security disability payment was $1,277. The average approval time is 3 years. And I read an article, and they did a study about 5 years ago. It was a 10-year study, and they said out of the 10 years, 34% of the claims actually got paid. The time for the initial review of the applications was about 3 to 5 months. But after about 3 years, all 34% of those people that were approved actually ended up getting their disability benefits. So, Social Security also defines a disability as the inability to engage in any substantial work activity. So, what that's saying is that if you're a veterinarian and you can't do your duties of a veterinarian, but you can, answer telephones or teach or anything like that, then you're going to be required to do a job, and you're going to get declined for the Social Security benefits because you can work in any capacity. So Social Security probably not, the solution for a lot of the professionals you're working with. What about a group disability plan? So in general, we often see a 60% of base salary paid up to maybe 15,000. There's usually a monthly maximum that we'll see. Oftentimes, that 60% will cover a salary, but may not cover bonus or commissions. So you want to make sure when you're reviewing it with your clients, does it cover that? There's often limitations that we'll go into in a little bit more detail in a second. And also, it's a really nice benefit to have a group disability plan for your clients. And oftentimes the employer's paying the premiums. That's great. If it's free, that's a good option. But let's say your client has a $5,000 monthly benefit, it's usually considered taxable. So their net after the taxes are taken out at the time of claim when the taxes are taken out, probably about 3750 of that $5,000 monthly benefit. So a couple of things that are good to know about group disability options. Total disability definition, they require you to lose at least 80% of your income before you're considered totally disabled and to start receiving benefits. Is it portable? Most of the disability policies that we review are not portable. That means that once you leave your employer, you no longer have coverage and you can't take that policy with you. Some plans, group policies do offer portability. So when you're reviewing that with your clients, see if there's a portable option. Potential cancellation. So, the employer themselves, they can stop a disability program if they wanted to. Sometimes the insurer can stop the disability policy as well. So it's not guaranteed. Taxable, we talked about. If your employer's paying it for the premiums, they're deducting it on their taxes. They're getting a tax break on it. At the time of claim, your client's going to pay taxes on any benefits they receive. If the client is paying for it with after-tax dollars, which is sometimes the case, then the monthly claim would not be taxable at that time. Benefit limits. We talked about, they sometimes will have a maximum of 5,000, 10,000, $20,000 monthly maximum, or some number in between. So you just want to check to see if your client's full salary is covered, any commissions or bonuses, uh, are they covered on the policy as well. Other benefits and offsets. So I review a lot of different group disability plans, and I've seen a lot of language over the years. Some of the more frequent that I see is Social Security benefits, vacation pay, sick pay, and other areas of benefits that they'll make sure that you use first before receiving the group disability claim. So, for example, we talked about Social Security. If your client would receive a $5,000 monthly benefit from the group policy, and they're receiving the $1,277 monthly benefit from Social Security, any monies from Social Security or any other offsets would offset that $5,000 monthly benefit. So it's also important to know what are the offsets of a group disability policy. Most of the group policies we look at are any occupation definition, which means that if your veterinarian client can't do her duties as a veterinarian, but she can do anything else. She can teach med school, or she can answer telephones. With the group disability plan, they're going to also require her to get another job, or I've even read be reasonably trained to do another job. Then she's going to be required to get another job, and any monies made would offset the group disability benefit. So we talked about group disability benefits, and once again, it is truly a great benefit to have. If it's paid for, that's a really good benefit offered to the employee or your client. There are some limitations. If your client does become fully disabled and they can't work at all, uh, definitely great to have this benefit, often paid till age 65. But there are some limitations to the benefits. The premiums for a group disability policy are going to be less than an individual, and premiums are always based on risk. So if there's greater chances that the insurance company doesn't have to pay out a full benefit, the premiums are going to be lowered. Let's look at the individual disability policies. LLIS works with the top disability insurance companies in the industry. We have good relationships with the underwriters. We work with the companies; they work well with us, and they have to work well with the insured as well and the applicant. So we're working with all the top companies. We also have different specialty lines for increased risk. So increased risk you might be a type 2 diabetic. It's definitely a decline with most companies. I might be able to find one insurance company that would accept that risk. It also may be, different occupations, right? So an occupation may be a higher risk that traditional lines won't take, but maybe some specialty lines might take it. We also work with professional athletes or entertainers who are, make a lot of money. It might be a cardiologist who makes 800,000 or $1 million a year. They have specialty options for these clients, so we'll work with those clients as well and find them a specialty line insurer that will take on that risk. So some of the benefits to an individual plan. So non-cancelable, guaranteed, renewable. Most of the policies that we're quoting are going to be guaranteed not to be canceled and guaranteed premiums to stay level. So what that's nice is the promise never to increase your premiums, because what can happen in the industry, and it doesn't happen often, but what can happen is you can take a block of insureds, maybe let's say males age 41 to 45, occupational class 5A, and in this group of individuals, the insurance company is losing money, so they didn't price it correctly. The insurance company can go into each individual state and request an increase, and the state may say yes, you can have a 5% increase, and they can pass it on to all their policyholders except the ones with the non-cancelable, guaranteed, renewable policies. So most of the policies that we're quoting are a level premium, guaranteed not to go up. Benefits payable up to age 70. We have many different options from 2 years, 5, 10-year benefit periods, also up to age 65, 67, or 70. So it's flexible and customizable to your client's needs and or wants. 90 to 170 or 720 day, so 90 days up to 2-year elimination period options available. Own occupation definitions. Yeah, we'll go into a little more detail on the own occupation. Residual partial disability benefits, catastrophic benefit rider, future increase option, and also cost of living increase. So let's talk about future increase option. Future increase option is a great option to have that allows your client to purchase additional monthly benefits in the future as their income grows without any medical underwriting. They base it on the medical underwriting at the time of initial application. So they'll take your health at that time and they'll say they'll approve you for future increase options. So as your income increases, you can purchase additional monthly benefits. It's an ease of underwriting. All that you have to do is show additional proof of additional income. They're not underwriting you from a medical standpoint. So let's say that, 2 or 3 years down the road, you slipped and fell and hurt your back, and now you're applying for additional monthly benefits. They can't hold that back pain against you. Or if you had melanoma on your skin or some other ailment, they can no longer hold that against you. So basically, you're locking in your future, you're locking in your health today for future purchases in the future. Great option to have. Residual disability. This is one of my favorite riders on a policy. And I say that because I think you have the greatest chance of being able to collect a claim. So this is an opportunity where you don't have to be fully disabled or considered 80% loss of income. All that you need to lose is 15 or 20% of your income due to a sickness or injury, and you're eligible to file a claim. This can happen on the front end of a disability and also a back end of a disability. So let's say, for example, take a ski trip and take a pretty good fall down the mountain. And maybe you hurt your hip, or maybe you're just getting migraines. And you go back to the office, and maybe you can't work at 100% capacity, and maybe you're working 50% of the time. And as long as you're losing 15 or 20%, depending on the company and the plan that your policy is with, you're able to collect a partial claim, not the full monthly disability benefit, but a partial loss will, make you eligible for a partial claim. And this also works on the back end of a disability. So let's say that we're out on claim for 2 years, 3 years due to maybe cancer treatments, and you go back to work, and maybe you can't go back at 100% capacity, or maybe your income is client based, and maybe you haven't been able to build those relationships and build that business up over the past year or 2 years, and it takes you more time to get up to that pre-disability income to ramp up your business again. Well, as long as you're still losing 15 to 20% of your income, you're eligible for a partial claim. How about cost of living adjustment? This one is sometimes confused with future increase option. Now remember, the future increase option, it allows you to purchase additional monthly benefits as your income is increasing along your career. Cost of living adjustment only goes into effect 1 year after being on claim. So you're no longer making an income, but you're on claim for at least a year. Usually they're going to add plus or minus 3% of monthly benefits to your policy every year that you're on claim after being on claim for 1 year. Catastrophic disability benefit. This one is, I like to think maybe the long-term care rider for the working years. What can trigger it? Maybe a cognitive injury, brain injury, maybe loss of hearing or eyesight. Something like similar to long-term care. You can't perform two of the daily activities of living. This will qualify you for an additional monthly benefit on top of the base monthly benefit on your policy. So the chance of it happening are less. There are less catastrophic disability claims than traditional disability claims. But when it does, like long-term care, usually expenses skyrocket. There's usually a lot of different bills coming in, especially from a nursing care or maybe nursing coming to your home, medical bills, transportation, etc. So this was really the development of the catastrophic disability rider. We also talked about own occupation versus any occupation. with group policies, any occupation saying, hey, if you can't do your duties of your job, but you can do anything else, you'll be forced to do anything else. Own occupation with an individual policy is what most professionals are looking for. Hey, if I can't be a physician or do surgeries, and I want to teach medicine, the disability policy is going to allow me if I choose to do another occupation or teach, they're going to allow me to keep the full teaching salary. Let's call it $75,000 a year, and collect full monthly benefits from my individual policy as I'm not being able to do my physician job. So it allows you to double dip, so to speak. It allows that flexibility. They're not forcing you to do another job, but if you want to, you can do that and not be penalized for it. So policy design, let's talk about how we build a policy. We talked about the base monthly benefit. The base monthly benefit is derived from the client's income and minus any group or individual plans in place. So, for example, if the client makes $100,000 a year, they have a $1,000 individual policy, they could probably qualify for about $4,000 of monthly benefits with an individual plan, additional benefits. So a total of about $5,000 on a $100,000 salary, plus or minus. Benefit periods, you have the option of going from 2, 5, 10, all the way up to age 70. Most of the quotes that we quote are going to be age 65 and a 90-day elimination period. Elimination period is really the deductible period, I like to call it. It's the time from onset of injury or illness to the time you can start accruing a claim. So for a 90-day elimination period, if you get injured on January 1st and you're out of work, you can start accruing a claim April 1st. So you have to wait that 90 days. It's flexible, right? So 180-day elimination period, if you stretch that out an additional 3 months, your clients can see an additional annual savings on their policy. Once again, the longer the elimination period, the less risk to the insurance company, so that also lowers the premiums. If your clients are in a good financial position, it may be advantageous to look at 180 days or even a year elimination period to save them premiums along the way. How about riders? We talked about the own occupation and the residual, cost of living adjustment, catastrophic, future increase option. These are the riders that we're quoting for most individuals. Keep in mind that you know, these policies are so flexible. This is probably what we average, disability quote that we're sending out, but we can customize it to fit the client's needs or wants. So what's the cost of income protection? Looking at lunch, we could probably easily spend $15 on lunch, daily coffee, $50 probably if you're stopping at the gas station. If you're going to Starbucks or somewhere else, you're going to pay a lot more than that on a monthly basis. Date night, I have $80 here, but just to get out of the door, I'm probably out $40 or $50 for a babysitter, and my date night costs a lot more than $80 at the end of the day. Income protection, 1 to 3% on average is what you can anticipate your clients paying. That could be more than that if your client is older or have a riskier occupation. Sometimes it's greater than 3%, but on average, usually around 2 or 3% is what we see you can anticipate the cost to be. What goes into that cost has a lot to do with occupation. So on here we have, it looks like construction workers, it looks like maybe a CPA, someone who's an MBA grad maybe. All these factors go into the risk in the insurance premium. So occupational classes. So a lot of the companies we work with go by anywhere from a B to a 6A. If you start off with a B, baggage handler, a bartender, this is going to be the highest risk, the highest cost per thousand of coverage. Also, probably going to see a limited rider option availability for these folks as well, or benefit period. As we go up, plumber, caterer, maybe an A. 2A, we're looking at medical lab techs or receptionist. And then over the next three, financial advisor can fall into any one of these three categories. A 3A is going to be your base financial advisor, just getting started. Um, just getting started. Maybe income is lower. A 4A is probably someone who has a little more tenureship, maybe making 75,000 or more per year. And then a 5A, we're looking at a financial advisor who's maybe a CFP or has some type of designation, maybe making $150,000 a year. We're looking at a 5A occupational class. And then your highest occupational class goes to those attorneys and CPAs, scientists, engineers with a PE designation or professional engineer designation after the name. Not all companies offer a sixth occupational class, but we're always asking what designations the clients have, or if I see an engineer, I always ask if they're a professional engineer, because if I can get them the 6A occupational class or the CPA 6A, we're always going to try to find the best premium and best fit for each individual client. Now, the premiums, once again, we talked about the mechanic and the bartender paying the highest cost per thousand. The lowest cost is going to come to the 6A, and then it's interchangeable in between. So lowest premium per thousand for 6A, highest for a B. So let's look at some case studies here. Here's David. He's a financial advisor, occupational class 4A. His income is $125,000 a year. He qualified for a monthly benefit of $61.60. He chose a 180-day elimination period, age 65 benefit period. In riders, he chose the own occupation, residual, cost of living, future increase option, and catastrophic disability benefits. And his annual premium is $2,636 per year. Now, keeping in mind, if David was a female, for the same policy, female rates are higher. So a female rate in the same situation would be $4,346. And I think that's about a 60% increase for someone who's age 38. Age 35, we're probably looking at about 70% increase in premium. Age 45, probably maybe a 30% increase in premium. Once again, insurance premiums are all based on risk. For men, we have a shorter life expectancy, so our premiums are higher for life insurance. For disability insurance, there's more claims with female claims, so the insurance premiums are increased with that. So here's another case study. Amy, who's age 35, she's an attorney, occupational class 6, making $100,000 a year. We were able to get her a benefit of $5,580, 90-day elimination period, age 65 benefit period, all the great riders we talked about, and a premium of $3,099. So keeping in mind that while these are all the riders that we typically quote in 90-day elimination period, 180 days, age 65, if you get, we talked about, objections, right? Objection may be cost. If a $3,000 premium is too high for your client, this is probably the Lexus policy that we're quoting here. The Toyota policy is a great policy as well. It costs less. It may not just have all the luxuries that the Lexus policy has. We can work on that. So don't let premium be the number one objective. We would much rather get a 5-year benefit period or a 10-year benefit period without some of these great riders and get some coverage for your clients than no coverage at all. Government employee, this is a unique situation where a lot of advisors and a lot of clients don't really know this, but a lot of government employees have a disability benefit through their retirement program. So, for example, the federal employee has a FERS, Federal Employment Retirement System. They'll have a 40% disability benefit through FERS. If they're a state or local government employee, they generally have a 60% benefit through their retirement disability program. Most companies will discount the same regardless of the benefit. So even if it's a 50% benefit, they're still either going to look at it as 40 or 60% a benefit. And then they're going to quote on top of that what the client is eligible for. But there is a unique case, and sometimes a government employee does not truly have um, that disability option through the retirement program. We have one company that we work with that will look at the policy. If you can get a letter from your HR saying you don't have the disability benefit, they'll be able to offer a larger monthly benefit and the monthly benefit that the client should have. So let's look at how each company will look at this. Here's a federal employee or a state employee, $80,000 income. With Guardian, they're going to look at that as a $570 monthly benefit that they're eligible for. Standard will look at it as $1,665. In principle, the company that will consider no group benefit, if we can prove that there's no group benefit for the government employee, they'll offer up to $4,000 for this client. In addition to that, with the Guardian policy, they're limited to $1,140 of future increase option. Standard and Principal will both offer up to the maximum that the client is eligible for in the future. So in this case, Principal is our go-to company for clients who are government employees and do not have a group disability policy in place. Multi-life cases, this is good to know. This is good to know for your business clients that own a business. Maybe wife and husband are both applying for policies and maybe have another person at the company that they're applying for. But if there are 3 or more applications from one company, they can qualify for a multi-life discount. The discount is up to 20% right off the top. And we just showed a couple premiums, 2,000, 3,000. It could easily be an $8,000 or a $10,000 annual premium for a client who's, making a high income. So a 20% discount can be huge. And then they can offer an additional 10% if the client opts to take a mental nervous limitation. And basically what that means is that if they go out on claim due to anxiety, depression, or substance abuse, they'll limit the benefit period to 24 months instead of to age 65. If the client is willing to limit that mental nervous claim to 24 months, then they'll give them an additional 10%. But on top of that, they also offer gender neutral rates. And this is great for females because we just talked about the difference between David and the female rate, right? It was up to 70% higher rates. Well, the gender neutral rate is between the male and the female rate. So somewhere in between is where they start, and then they take the 20% discount and then the additional 10% off of that. So this is not a multi-life case is not going to be for most of your clients, but it's good to know if you're working with an individual or individuals from one company or business owner that can take advantage of these discounts. If we have 3 or more applications from that one company, they can qualify for these discounts. So student loans are big, especially in the physician world, attorneys. We often see sometimes $100,000, $200,000 in student loan debt. So it can be covered. We can do that through a rider, a student loan rider on a policy. And here's an example here. Marcus, he's a CPA. He got this 6A occupational class, $110,000 income, 5550 monthly benefit, all the great riders. Annual premium was $1,648. We were able to attach a student loan rider, $1,000 monthly benefit student loan rider, and the premium was $69 per year. So how this is going to work is once David's out on disability, full disability, he'll get reimbursed up to $1,000 of monthly or $1,000 of monthly benefits. So Marcus can make his student loan premium payments, and he'll get reimbursed $1,000 every month. So another case study here, Samantha. She's age 35. She's an attorney. $140,000 income, $6,800 monthly benefit. Elimination period 90 days. She's got all the great riders here as well on her policy. Her annual premium was $33.75 on her base policy, but she also took advantage of the student loan rider. We were able to get her up to $1,500 of monthly benefits, and her student loan premium was $224 per year. So not bad to cover an additional $1,500 of monthly benefits. So what about retirement protection options? So The great thing about your base individual disability policy is that every month your claim monthly benefits go direct deposit into your bank account. You can use these funds to pay for your medical bills, your um, you know all your expenses throughout the month. It's really replacing your income. But one thing that you are missing in this time period is if you are no longer working, you're no longer contributing to a retirement fund, and your employer is also not contributing to your retirement fund. So a retirement protection plan was developed to take the place once your benefits end, your monthly benefits, disability benefits end at age 65. At retirement age, you're able to access these funds for retirement. So while your base policy benefits went into your bank account, the retirement protection option goes into a trust, and it continues to build funds for you so that when you do become at retirement age, your individual disability plan drops off, the retirement protection plan kicks in. You're able to access those funds from the trust. So here's Amit. He's age 37, web developer. He is making $155,000 a year. He has a base policy with all the great benefits, a nice premium. He was able to qualify for an additional retirement benefit of $1,990, so almost $2,000 of monthly benefits. It also has future benefit increases, so that will increase over time. Cost of living adjustments to kick in to take in the cost of inflation once that he's been on claim for 1 year. The cost for Amit's retirement protection option was $551 per year to cover his retirement. So there's Joan. She's age 37. She's a chief financial officer, occupational class 5A. She also qualified for a 6530 monthly benefit. She has all the great riders. Annual premium is $3,953 for her policy. So she was able to qualify for an additional $1,740 of monthly benefits. She has the future benefit increase, so her policy once she's able to increase that monthly benefit along the way. Cost of living adjustment, so if she does actually go into claim, she's able to add additional monthly benefits once being on claim. And her retirement protection premium was $696. So once again, $1,740 of monthly benefits would go into her trust every single month as long as she's on retirement or on disability claim. So underwriting. So when we talk about underwriting, we're looking at some favorable underwriting now during COVID times. So, now is really probably a good time to go into underwriting or encourage your clients to do it. And I say that because the insurance companies have become a little bit more lax on exams and labs. So, traditionally before COVID, we had a lot more exams and labs ordered. Now, what they're trying to get people to not have someone come to the house and nursing to do the exam and exposed to COVID. So what they were doing is you're looking into the application, and then they would also look at the telephone interview and medical records, and then determine if an exam or lab is needed. So now there's an option that there's a good chance that your clients may not need that lab. That's a very good thing. Some of them are going to become permanent like that. They've had good experience. The underwriters have good experience. That COVID underwriting may go away shortly with some of the insurance companies that we work with, but now's a great time to go into underwriting. Some companies also offered a higher monthly benefit than they traditionally would during COVID times, and that's also a nice option to have. But when it comes to underwriting, there's a couple focuses. One is extremely on financial underwriting. So they look at extensive financial underwriting. If you're going to get a mortgage for 500,000, all the paperwork and all the financials you have to submit for a $500,000 or $750,000 mortgage. Well, in disability insurance, they also want to look at your finances too. It might be the past 2 or 3 years. They want to determine, make sure that they're underwriting you for the correct amount. And more than 500,000 or 750,000, these insurance companies are really off on the hook for, $1 million, $5 million, or $8 million over, the entire period of your career that they could potentially have to pay out. So they want to make sure that they're looking at your business schedules. If you're a W-2 employee, it could be easier. You just have to show uh, your W-2, maybe a current pay stub. If you're a consultant, they're going to want to see, do you have any ongoing contracts? If you're a business owner, they're going to want to look at your contracts as well if you have those. So, extensive financial underwriting with disability insurance and medical underwriting. Medical underwriting, uh, they're going to look at your application. They're going to look at labs if you've done labs. They want to look at your medical records. They're going to consider your telephone interview. Um, and they're really looking at morbidity, right? So they're looking if you have a couple different ailments that may lead to further ailments, different than life insurance underwriting. Life insurance is looking at mortality. So it's possible that you can get a very good approval for life insurance and also get declined for disability because maybe you have a condition that might be disabling and maybe not able to work, but it's not going to kill you, so it's more favorable for life insurance. So they're looking at all the different health ailments that you may have and how they can work together um, to cause additional claims. Also, marijuana, that's been a popular topic over the past couple of years. What it really comes down to, a lot of clients are admitting to marijuana now because it's legal in many states. Um, but it all comes down to the frequency, right? So the disability companies are more lenient on marijuana than the life insurance companies. If you use marijuana a once a week or less, most all the companies are going to consider you for non-tobacco rates. It's really not going to affect anything. If it's more than once a week, it can be anywhere from tobacco rates, or if it's like really daily or every other day, you're probably going to get a decline with most companies. But if you do get tobacco rates, with disability companies, there's probably only about a 25% increase over a non-tobacco rate. With life insurance, it could be 2 or 3 times higher premiums for life insurance. So not quite as bad as life insurance. Exclusions, if you have anxiety, depression, some of the main exclusions we'll see is mental nervous. Basically, that means that if you go out on claim due to anxiety and that was a pre-existing condition, they're not going to cover it. With mental nervous, we'll often see a 5-year benefit period for all claims, not just mental nervous. Some riders may also be removed. They may not offer the own occupation or other riders as well. Common one we see as well is a back exclusion. So if you have back pain, you're seeing a chiropractor, they're not going to cover a claim due to back pain. Now, they will consider a claim that maybe you're in an automobile accident and you get a fracture and your spine is crushed, and that was clearly due to the auto accident. You can still file a claim, and chances are it might be paid, but just not due to a previous existing condition. We also look at reconsideration periods. So, for someone who has mild anxiety, maybe hasn't had any symptoms in the past 6 months, they may reconsider that mental nervous exclusion 2 years down the road, and they're going to look at has there been any treatment or any symptoms in the past 2 years. They're going to go back and look at medical records. If there hasn't been any treatment or symptoms, maybe in that 2-year period, they'll consider removing the mental nervous exclusion from the policy. And we have a great team here, policyholder services team, that do a really phenomenal job about going back to clients. What we'll do is, if it is a reconsiderable exclusion, we'll ask the client, hey, would you like us to reach out in 2 or 3 years and see how things are going? Oftentimes, things are better in 2 or 3 years. We'll initiate that process and start to process with the underwriters of the insurance company. And we've been very successful with getting exclusions removed. So here's a case study. One great website, if any of your clients are saying it's really not going to happen to me and they really need more resources, there's a website called disabilitycanhappen.org. This is one of the case studies I saw there. It was, I think, under life cases or life studies. And here's Monica. She's age 37. She worked for Merrill Lynch. She worked with a lot of top producers in Merrill Lynch, and she was really studying to be a CFP. and unfortunately, she had fell off her porch and she shattered her elbow. And I guess it was shattered into multiple different pieces, and she was able to recover from that. And but after the initial recovery, she developed a condition that was known as dying of the bone, and as a result, she ended up in a wheelchair. Now, I'm not sure if she had that condition when uh, she shattered her elbow, or whether that was a condition that was developed from the elbow. But something completely you'd never think about. She fell off her porch. She broke her elbow. It triggered some other effects. Unfortunately, Monica ended up in a wheelchair. She also would have qualified for long-term care needs as well. Um, but it was a bad situation for her. She said that when she was younger, she wanted the health insurance and she wanted the life insurance, but she was young and healthy. She didn't think she would ever need disability insurance. So what she ended up doing is, her mother helped her out. She maxed out her credit cards to help, took money from retirement accounts. And there's a video of Monica that kind of explains, she felt really bad to put her mother in that position. She also had to cash out her retirement fund. So, uh, what Monica is saying is, she didn't purchase disability insurance because she was young and healthy. So, her advice to everybody is, you know, um, plan at a young age. Working with fee-only advisors, y'all are out there, and it may be the first time your clients have a good conversation about disability insurance. Find out if they have group. Find out what details are in the group policies. When most of the professionals that we work with, they have that free group insurance. Even though it's limited, it's great to have. Most of them will stack an individual policy on top of that with all the richness, kind of the best of both worlds, to have a group policy and an individual policy. But talk to your clients. When I was young, I think in my 20s or 30s, I was working with an advisor. They asked about disability insurance, but I didn't have it. I didn't feel like I was going to be disabled, so I never paid the extra money it was for out of my paychecks. Um, but once I got into the industry, I learned a lot about disability insurance. So make sure you're at least having the conversations with your clients. Make sure they understand what they have and what effect it'll have if they lose their income. But just talk to your clients. So one of the questions I get often is, when is the best time to buy disability insurance? And the short answer is, really, if your client depends on their paycheck, now's the best time to apply. It only gets more costly as you wait, and you also generally, health declines along the way, so you'll end up with exclusions or maybe even the possibility of being declined down the road. So now's the best time for your clients to apply if they depend on their paycheck. So LLIS.com, we have under advisors and advisor tools, we have a comparison of group and individual. We went a little detail earlier on in the presentation. Here's just a quick cheat sheet you can print off, have at your desk. But any questions, please call Kathy or myself. We're always happy to answer any questions. Drop us an email. We're also happy to review your client's disability policies, individual or group. Happy to walk through and look at the benefits that they have, identify some of the pitfalls or some of the advantages. Most of the time, we'll tell you to keep the policy they have, because if we're going to replace that policy years later, it's going to cost them more money to do it. If they need more insurance, then we could always stack a policy on top of their existing policies. So 10 things that make LLX different. Free monthly webinars. Next month, Kathy will be talking about specialty specific disability coverage. We work with fee-only advisors, and we proudly sponsor NAPFA, XY, ACP, NAPFA Genesis, Garrett Planning Network, and we also manage our clients. We let them know, give them notifications if their terms expiring, advance premium emails. We want to make sure they don't lapse. And Alice. Alice is a great tool that you can access all your clients' policy information. You can also work directly with us here as well through the Alice portal. I'd love to thank you all for your time, and love to open up to any questions you may have. So first question I have here is, Brian, are ongoing disability benefits contingent on remaining employed with that employer? So ongoing, once you're on claim, you may not go back to that employer. So you would continue to get paid through the remaining of that benefit period as long as you remain disabled. So if your policy goes to age 65, you go on claim at age 40, it'll pay for the next 25 years. And oftentimes, obviously, if you're on disability, you'll no longer be with that employer. Next question says, Brian, could you please touch on the typical catastrophic disability triggers? Sorry if you already listed those and I just missed it. So, we're looking at cognitive injuries, Alzheimer's disease, brain injuries, could be eyesight, loss of hearing, really any of those long-term care activities. For Monica, the example we just spoke about, she actually needed long-term care because her bones were so fragile. She ended up in a wheelchair, and she needed to hire nurses to come to her home. So she qualified because she couldn't do the transportation. She couldn't do two of the daily activities of living. So catastrophic would be an additional monthly benefit she would have qualified for had she had that rider on her policy. Let me see here. So next question is, what's the document we should request to understand the terms included in the group disability policy? So yeah, good question. So basically, you want to ask for the policy details. Oftentimes, it'll be a full detailed policy. But sometimes what you receive from the HR department is minimal. So you want to look for all the policy specs or policy details page. Is marijuana use defined as smoking, inhaling, cannabis, or any other forms edible? Yeah, so lotions, creams. Yeah, so they're looking at all different types. CDB, or they're looking for the different types of cannabis, and they're going to underwrite it similarly. If marijuana is smoked or it's edible, or the lotion and cream, they want to find out the consistency and the frequency of it. If you have a client that is a medical resident, which plans do you have available for them? Oh, that's a great question. So there's a new professionals program that allows young medical residents and other young professionals as well a guaranteed set amount of monthly benefits, future increase options, all the great riders as well, regardless of their income or regardless of any group disability options they have in place. So most of the time, if you're not in a part of a young professional, if you have a group option, it's going to count against what you're eligible for. But under the new professionals program, a physician may qualify up to $6,000 or $7,000 of monthly benefits, even if they're a young resident or just new in their career, not making a lot of money. They'll still qualify for that amount and probably up to $13,000 of additional future increase options as well. Any additional questions? Great. Well, I'd like to thank everybody. Thank you for tuning in today. I hope you took away one or two important notes about disability insurance. Remember, keep talking to your clients about disability insurance. It's really important to help mitigate that risk. And if you have any questions, once again, please reach out to Kathy or I, email, phone. We're happy to answer and happy to help your clients out. Thank you all and have a great day.